In this video, we will demonstrate how you can calculate for the statement of change in equity. So remember that the statement of changes in equity reconciles the opening and closing balance of equity in the company during a particular reporting period, usually 1 year. So an example would be Novocana Clinic, which is a not-for-profit clinic, began 2022 with an equity balance of $1.5 million, assuming that the clinic reported a net income of $700,000 for the year, ended on December 31, 2021, and had no other adjustments to equity during 2021. What was the clinic's equity balance as of December 31, 2020? And so essentially we are looking at 3 different time periods here, with beginning of 2022, and we have reported income also in 2021, but we are actually looking for the equity balance for December 31, 2020. Okay. So we know that opening balance of the equity at the start of the year is equal to the closing balance of your equity from the end of your previous year. So in this case, we are looking at the opening balance of equity at the beginning of 2022 is equal to the closing balance of equity at the end of 2021. Therefore, $1.5 million that was reported as the opening balance at the beginning of 2022 means that $1.5 million is the closing balance of the equity at the end of 2021. Right, so now that we know this, we can now calculate for the opening balance of the previous year. So to do that, we look at the closing balance of the equity at the end of 2021, which is $1.5 million, equals the opening balance plus the net income minus the dividends plus all other changes. Right? So to calculate just for the opening balance, because we need to know this figure, we will just need to subtract from the closing balance the net income plus the dividends plus all other changes. In this case, the question actually is saying that there are no other adjustments executed in 2021. So we can calculate this easily as just subtracting $1.5 million minus $700,000 or $800,000. This is the opening balance of the equity at the beginning of 2021. So remember that the opening balance of the current year is equal to the closing balance of the previous year, which means that the opening balance of at the beginning of 2021 is equal to the closing balance at the end of 2020. So remember the question for this particular scenario is what was the equity balance as of December 31, 2020. So the answer there is the equity at the end of 2020 is equal to $800,000.